Oh, it's been a tremendous drag simply because there's so much uncertainty, and then a lot of investment decisions are being placed on hold. Now, to the extent you're going to get some clarity, hopefully soon, then obviously companies can make some decisions on how to move forward. It's always the issue, you know what you're dealing with versus you not knowing what you're dealing with.
Can you imagine being the CEO of a mid-sized or large corporation that's based in the UK? How do you make plans? How do you make capital spending plans? How do you know where to hire and where to grow when you don't know what your trade partnerships are going to be?
That's exactly it. So you're on hold. And this actually also applies to the China trade deal, right? I mean, we're supposed to get something in early March. It's now been pushed out into April. And that's the longer that's dragging out as well, the longer that impacts global trade. And so there's a lot of pressure to finally get something done. Keep in mind, one of the key reasons earnings estimates have come down and growth projections keep coming down is because there are these two big uncertainties lingering around. So they're a big trigger here in the next few weeks.
You know, you always say stuff that sort of catches our ear. If you were a Viking, and maybe you are, Sven Henrich, I'm going to call you Sven the Sarcastic because you've got this wicked sense of humor. And you said that everybody here, the Fed, Wall Street, is, quote, chasing reality. Sounds like a 90s movie. But what do you mean by that?
Well, look, let's go back to where we were last year, right? The U.S. government was projecting 3 to 4% GDP growth and a shrinking deficit, and we got exactly the opposite. We have slowing growth. The Fed is projecting 2% growth this year and less than 2% growth for next year. And obviously, we just had the largest monthly deficit in U.S. history last week for February. On the side of the Fed, that was a complete 180. Just a few months ago, they were on balance sheet roll-off on autopilot with rate hikes for 2019. That's not happening. And even Wall Street, go back to just September, October, there were market upgrades, there were stock upgrades, and obviously none of them projected an earnings recession for Q1 of 2019. That's exactly what's happening. So that's why I'm saying everybody's chasing reality here. At the same time, there's a lot of certainty expressed that there will not be a recession, even though the yield curve has just inverted last week. And that tracker in particular has an 85% probability that a recession may unfold in the next 6 months to 2 years. It's a wide range indicator.
You know, the signals, I can't recall a time in the last couple of years where the signals seem so different. On one hand, Sven, we just showed it to our audience, you got a 10-year U.S. note yielding 2.43%, hardly a sign of growth. On the other hand, you've got an S&P 500 that's up 13% this year. Somebody, I think, is going to be spectacularly wrong.
Well, look, let's put it in context why we had this rally. Obviously, in late December, we were vastly oversold, and so it totally made sense to see reconnects with moving averages and all that stuff. What happened then, though, we had obviously the Fed being the main driver of this rally on the one hand with completely switching policy. Then we had massive buybacks coming in. And by the way, those are coming out now for a few weeks during the earnings season. And so this rally has actually been kind of deceiving here in the last few weeks. And I say deceiving because we see the S&P and the NDX actually being very high vis-a-vis, let's say, the rest of the market. Small caps, transports, banks have actually really been selling off quite a bit in March.
So you're worried, Sven. To wrap it up, are you worried about the U.S. markets?
I am concerned. I mean, yes, we have these upside triggers. If they play out, we can rally nicely. But there are warning signs underneath the market that says, pay attention. We're still close to perhaps breaking a major pattern here on the S&P, but it hasn't happened yet. So far, so good. But watch out for the data and watch out for Q1 earnings reports and the outlooks and see if there's going to be any revisions to the downside because earnings estimates may still be too high.